We're joined by Max Kaiser, stockbroker turned activist, who predicts America's on a slippery slope to economic collapse. Thanks for joining us. What do you think of America's national debt levels?
Levels are outrageous, and the way that the America can get away with it is by maintaining the world reserve currency. Is a big part of the American hegemony or the American empire. You know, when America writes checks or creates bonds to other countries, when those bonds are due, America just creates more bonds. So it's what some call an extraordinary privilege. And this is why countries like Russia, China are looking to divorce themselves from the U.S. dollar. They're doing more deals amongst themselves, more bilateral deals in their local currencies and the regional currencies. And this is ultimately, America is a debt-aholic.
What are the consequences of America's national debt?
Well, I think it's in the works right now, some kind of gold bullion-backed currency. And it's not, the implications for the U.S. are not great because they have this huge debt. So they would be forced to pay off their debt not by just inflating themselves out of the problem by creating more paper. If the rest of the world becomes more competitive and the rest of the world starts adopting real sound currencies, the U.S. would also be forced to be competitive to some degree, greater than they currently are. And in a real, let's say, fair, competitive race, the U.S. has the weakest currency. You know, if the global economic and business game is a game of poker, the U.S. is holding a terrible hand.
What do you think about the Federal Reserve getting more powers from the Obama administration when many blame the Fed for the crisis?
No, to use the alcoholic metaphor, that's like giving the alcoholic more to drink. Hank Paulson and his successor, Tim Geithner, are part of the financial oligarchy. They're part of the banking oligarchy. Their interests are not the same as the interests of American citizens. Their interests are part of a global banking group, a global banking cartel. The same group of bankers all over the world seek to keep interest rates as low as possible, to make it as easy for them to borrow as possible, because they know when they make a bad bet, their respective governments bail them out with taxpayer money. It's really a war. There's a global war going on. It's the war between investors versus speculators. Anyone who's trying to invest money and get a decent return or work to make a decent wage is being squeezed out or pushed out by the speculators who have access to cheap money through political connections.
Do you believe the American bailout is a form of protectionism?
Well, it's not free market capitalism. It's an industrial policy. It's a policy of the government wanting to get into every nook and cranny of the business sector, because the people who are in politics and in business want the cheapest possible access to money that's possible, and they don't want to compete. So the easiest way not to compete is to get the government to do business with the government, who has the ability to raise taxes, to confiscate wealth, to wage wars. So it's not a coincidence that the primary GDP boosting activities of America are war, which are services, the war councils that are on the board of directors of these banks and in Washington, and cheap consumerism and consuming foreign-made goods, slave-made goods in other countries. And again, with the U.S., it's great if you have the world reserve currency and everyone needs to buy U.S. dollars to conduct their business. And this is why countries like Russia and China and Iran and Brazil are trying to divorce themselves away from the U.S. because it's a completely toxic currency that's just rife with accounting fraud. It supports an empire that is too lazy to compete, and the way that they make their money is through cheap consumption and war and prisons. And the rest of the world is saying, you know, we want to move on from this model. We want to do something a little bit more vibrant, a little bit more capitalistic, a little bit more dynamic.
What's going to happen to this shadow banking system if it keeps going unchecked?
What will happen is there's going to be a currency revaluation across the globe. The dollar will be cut probably be cut in half versus its other major trading currencies. Well, gold in particular will have to be, as it was in the 30s, valued upward. So gold and precious metals and any currency that brings in a basket of commodities or precious metals as the basis of that currency will, in concert, you're going to see a revaluation of gold bullion, I believe. And you can see the price of gold move up 50, 60% in one day or 1 week, or could move up 100% in a week. This means that all currencies are going to be revalued against gold, and the currency that stands to lose the most would be the U.S. dollar. So therefore, and people wake up in America, which is, as has happened in other countries like Iceland recently, or other bailout countries from the IMF, or in Russia, or in the UK in the 70s. And suddenly they wake up and it's like, oh, our currency was devalued by 50%. We're now being bailed out by the IMF and the World Bank. Everything at the store costs double or triple or quadruple. And there's nothing they can do about it. Because it's not like this thing's happening without a careful, coordinated plan by the banking establishment around the world that's setting this all up to go when it needs to go. It's going to be relatively effortless on their part. Like when Europe embraced the euro, think about this new currency grid happening pretty quickly, and all currencies, most of the trading currencies having a new relative value versus commodity basket of commodities. Of course, the U.S. is not going to be happy about it, but most of the major wealth in the U.S. will be outside of the U.S. by then.
You say that people are pulling their money out of America. Do you have any data to support this?
Well, the data is, you see it in the price of gold bullion, for one thing. With all this talk about deflation, and in fact with GDPs contracting and with economics and slowing down, you still have the price of gold doing very well. You also see currencies outside of the U.S. start to break away from the U.S. dollar and do pretty well. Currencies like New Zealand and Australia, markets in other countries are outperforming the U.S. right now. The U.S. is snapping back a little bit, but these other countries are doing much better. You know, the Russian stock market is doing fantastically well. They've got resources, a good infrastructure, and they've got great relationships now with China and Iran and Brazil and these other countries. So they're positioning themselves into hard assets because they know that the fiat currency, U.S. dollar-based global post-World War II, IMF, World Bank, phantasmagorical world of never having to pay your debts that the world has had to suffer through since World War II is coming to a close. And once it happens, you know, you want to be on the right side of that trade.
Are you prepared to stick your neck out and say by this date will be doomsday for America, as you call it?
In the U.S., the number I would look at is the unemployment number, which is continuing to creep up. The wage number is continuing to go down on an hourly basis. And even if you want to play with the numbers on employment and unemployment, and there's a lot of ways that these statistics are cooked and they're arranged, the basic hourly wage number is continuing to deteriorate. So at some point, there will be a critical mass of unemployed people in America who will then, I think, spontaneously, as it happens in various countries, will suddenly have had it. They will have had it. They will decide that this is it. We can't take it anymore. The honeymoon of Barack Obama seems to be entering a new phase where people are less excited by his program of change because they don't see any change in the banking system. And the bankers are still very much pilfering and very much stealing, and they want more power. So it's tough to say exactly when that spark will hit that ignites the Hindenburg of social unrest in the U.S. But I don't think at this point I don't think you can reverse it. There's nothing that can be done to reverse this inevitable collision. And I think that also one of the amazing stories of 9/11 is how when the 9/11 disaster hit was really the beginning of when the wealthiest in America start to move their money out of the U.S. That was what they got from that. That's what they learned. That was their lesson, that the U.S. isn't really safe for my money anymore. And they started to move their money out of the U.S. aggressively since 9/11. A lot of the complications, and the reason why Alan Greenspan lowered interest rates down to 1% after 9/11 was in a large part to allow the wealthiest in America to assist them in moving all their capital out of America.
Tell us about this Karma Bank that you've created.
Well, Karma Bank is like, what if Gandhi and George Soros had a love child, basically. What I did was I figured out which companies, if a large boycott were enacted, would have the greatest impact on a share price. So which company's market capitalization is most weighted toward a consumer boycott and would cause the most damage. So like a company like Exxon is not particularly vulnerable to a consumer boycott because they're diversified in many ways. Their stock doesn't trade at a high multiple of the sales, of retail sales. But a company like Coca-Cola is very vulnerable to a boycott. The second turbocharged aspects to the Karma Bank methodology is that if enough people decide that they're going to boycott a product like a Coca-Cola, it will have an impact on their quarterly revenues and profits. In America, they're used to the idea of, well, if I like the company, I'll buy the stock. So this is just the opposite. I don't like the company, I'm going to boycott the stock to the point where hedge funds start selling short that stock.
Some people have called you a financial terrorist. How do you respond to that?
That would be incorrect.
Okay.
What I'm suggesting is not in any way can be considered financial terrorism. It can be considered economics because what I'm saying is that a lot of these companies have unrealized risk that's not reflected on their balance sheet, which is descent risk. I'm making that risk visible, and by making it visible and quantifying it, it should be reflected in the stock's price. And hedge funds who work for large institutions and pension funds and endowments looking for ways to increase returns to help the people who benefit from those large institutional accounts would benefit from this approach.
Thank you very much for taking the time to talk to us.